Hey guys, how are we doing? It's Cryptoinsightuk here, bringing you back another YouTube video. It's going to be a really informal video. It's going to give you my market perspectives on 2023, both in a macro sense, looking at equities specifically, what I think is going on in the wider economy, and also into crypto as well. It's going to be really informal because I'm pretty hungover. It's New Year's Day. I just wanted to get all these thoughts down for you because I've been speaking to my sister about this morning, and I thought, well, I don't want to hold all this in my head, and I'll give it to you guys. I do dive into a lot of these topics on my newsletter as well. I want to start with just by talking about inflation. I said at the top when I thought inflation had peaked, and I still think inflation has peaked, and I think we're going to see that come down into 2023. Maybe, and a big bold statement I put out on Twitter, going into negative inflation around June, July, or August. Well, as a general rule of thumb, and this isn't gospel, there's a lot more things to take into consideration when we look at CPI specifically. But oil, in my opinion, has about a 3 to 6 month lead on CPI and inflation, and if that keeps and continues to come down lower, we should see CPI continue downwards. Oil's paused out recently, but 3 to 6 months, we're still going to see a further depreciation inflation, in my opinion. So how could it go negative when we were at 10% this time last year? Well, that's exactly how CPI is year over year. So for us to increase, we'd have to increase a further on top of what we were at this time last year, or in June of last year when we were at 10%. If we wanted to increase 2% from there, we'd have to increase 2% on top of that 10 from the year before. So essentially over 12 years, we would have increased by 12%. And that's why we could potentially see negative inflation, because I do think the Fed are over tightening, and that will have an adverse effect on inflation rates. And it isn't inflation that's going to be the problem. It's actually going to be growth. And we're going to get into that right now. I had to re-record the start of this video because I kept saying interest rates when I meant inflation. So let's continue from where I was. The Fed have over tightened. I think we've got a lot of problems economically. I think that if we're going to talk about the Fed quickly, they did 3.75 basis point hikes, and then the last one a 0.5. Inverted yield curves now with the 2-year and 10-year treasuries. I think a lot of people in the market think it was a mistake even to raise 0.5. I'm one of those people. But another thing that people aren't taking from that is that they're actually slowing down, and end is in sight, even if they stick to their guns all the way to the end of the policy, into the end of the rate hikes that they've been calling for. The end is coming. We're seeing problems in Japan. Japan have raised their treasury bond caps from 0.25 to 0.5%. And in the last 2 days, I think they bought the most bonds ever. So people are panicking in Japan. Could that spill over into the US bond market? I think there's potential for that. I'm not a massive expert in Japan. It's just something that I've definitely got my eye on. I think they're the biggest overseas investors in the world. So it's scary if something's going wrong with their market. They could be the straw that breaks the camel's back, but it's a big straw, potentially. And then we're going to get onto my personal beliefs. I believe that the Federal Reserve will pause or pivot by the end of Q1, if not before, into Q2 of 2023. I believe there's the most money ever sitting on the sidelines in terms of markets. And then if we want to get into the sentimental side of things, everyone's so bearish. Put-call ratio of 1.5 puts to calls, meaning there's 1.5 people who are short to every one person that's long. We are also in a period a little bit ago, I don't know if we're still in that period that I wrote about in my newsletter, where less than 20% of the market are bullish. Only happened a few times in history. Yes, these periods can last for a year or so. They can, or they can last for weeks, months, whatever. But they normally mark a reversal and a push up after this period finishes. Going on to sentiment, I think there's a big argument for bearish sentiment from a lot of different people. I think new financial experts, people who have graduated colleges, universities, who have been in the market for say 20 years, 10 to 20 years, have never seen a period like this, just like myself. I'm in the position where I don't have to be influenced by outside sources. I do my own information, I read my own information, find out things for myself. If you're in an organization, you're probably being told a structured way to invest, and it has its pros and cons, in my opinion. Those people have probably been on like a 60-40 balanced portfolio, maybe some cash too. So like, let's say treasuries, ETFs and cash. It's been making money pretty easily for the last like 10 to 20 years, aside from the housing market crash in 2008. But that model has been pretty effective probably the whole time that they've been in industry. And this is probably one of the first years that they will have really seen a big downturn in their portfolio. This, in my opinion, so probably a lot of companies, and you can see it from their financial reports, got wrecked last year. They don't want to get wrecked again this year. It does often sentimentally lead to a lot of people over leveraging one way. So if they're short, then they might be like, oh crap, we got wrecked to the downside, so let's bang a short on and try and make that money back. And I think that that's what a lot of people are doing. And then further out in the age spectrum, to those who have been in the 2008 housing market crisis, so that was like what now, say 15 years ago. Those people who remember that and experienced that when they were the age that these young financial traders who are just into the market are at, they also have skeletons in their closet from being burnt probably in 2008, and they're probably over bearish as well. And from experience, I know some people who are like rolling their short positions over, doubling up on shorts. And this is why you can see put to call ratios like they are, but also why I think a lot of the market in itself is negative. No one wants to be caught on the downside of the trade. Everyone wants to be the guy who called for the great financial crisis, which is on the tip of the tongue for a lot of people at the minute. Do I personally believe that's coming? I think it's possible. I don't want to say that it's not. I look like an idiot if my calls are wrong, but I'm happy to give my opinion. I don't think it's going to happen, but I do think it's possible. I think that if we were going to let that happen, we would let it happen. Let that happen in 2000 when we had our first like mini stock market crash from like the tech bubble. And then again, could let it happen again in 2008, but everything's too over levered, and so they saved the banks. It's essentially the same thing happening again now, but on a bigger scale, in my opinion, with more debt. So what are they going to do? Let it crash now when they've already shown that they're willing to do anything to let things continue? I don't think so. I think that they will stimulate again at some point and increase debt because it's all we can do. We live in a debt-based system. Literally, you get loaned money with interest that you have to pay back over 2 years, and that is literally the creation of money. So for anyone who thinks that that may or may not continue, then that's your opinion, but mine is that we are close to a bottom and they won't let it collapse. I think we could be close to a bottom in terms of price action. I think if you look at the technical structure, specifically the Dow Jones Industrial Average, it's broken out of a broadening descending wedge. It's sitting on top of that as support on the daily time frame. It's been sitting there for about a week and a half, and talking about this in my newsletter. It's also on top of the moving averages. To me, looks more likely to have a leg upwards towards all-time highs than it is to come down, even with all the short pressure. And now I understand the flip side of the argument, where everyone's basically saying that if we go back to my inflation, if we have that much of a decrease of inflation, it means growth's collapsing and we're being probably in a recession, and that's bad for stocks and shares. Companies are going to go bankrupt. People aren't going to have jobs. People at the minute in the general public are really upset about price increases. But as soon as people haven't got jobs, then it's going to be more of an issue, in my opinion, than price increases. And I think that the Fed will have to pivot pretty quickly to try and stimulate growth. And I think they'll probably realise this, and that's why we'll probably see fiscal stimulus, if not more packages being created to bail out companies, because they won't let things collapse. Yeah, as I said, I think that we're going to see a push towards the upside in equities. I think there's going to be extreme volatility both ways. I think you can see this from the DXY. The DXY has fallen like 8-9% off memory. In that same drawdown or that same period in 2017, crypto, for example, saw the biggest bull run ever, from like 17 billion up to like 600 billion or 300 billion. Sorry, off the top of my head. And this time we haven't seen that run. The day that the DXY lost its support, FTX collapse, very convenient timing in my opinion. Does that mean crypto is ready for a surge to catch up? I potentially think so. There's a lot lining up in terms of wider economic policies. We see crypto legislation come through in Brazil for payments, China with the digital yuan, India with digital rupee, Russia coming through and saying they're going to legalize crypto in Q1 for cross-border payments, America testing their CBDC, cross-border payment tests in general rocketing, whether you like XRP and Ripple or not. Huge ODL coverage now, 95% of the world. FX pairs can be covered through ODL corridors. I think on a technical structure, it could look different to what it's looked like in the past because of how much cash we've got sitting about and how much everyone's panicking and not wanting to be on the wrong side of the trade, like I've talked about a lot. I think the DXY has the potential to really come down further. If everything I'm saying is right, the DXY will continue to come down, and when that happens, we do see normally a rise in equities. I think it's going to be a bit of a mismatch, mashing all over the place, like different to the past. Oil, I think, will come down further and then potentially rise. We may see a second leg in inflation towards the end of the year if the Fed do start to pivot, which I think they will do. Halfway through the year, but at some point, like as I said, Q1, but then obviously it's a lag into how that affects the market for maybe 3-6 months, which is the problem we've got at the minute, which is why I think we could potentially see negative inflation in June, is because they're 6 months behind, in my opinion, at least 6 months behind. If I'm right with what I'm saying into Q1 and Q2, things change. We may push before that because the markets are forward looking. If the bond market's telling the Fed things are going to break or have broken, we're in a recession, they may change policy earlier. This might mean we see a push as soon as January or February, potentially. I think if I'm right, the best risk to reward areas are crypto, specifically in my opinion XRP, and I know that a lot of people think that I'm just got rose-tinted glasses for XRP. I think it's a great investment, short, medium and long term. I think on a technical level, we're waiting to see some big fat green candles, and I don't know when they come. People speculate that it's off the back of the lawsuit ending as a catalyst, potentially. That's just technically shown from the charts, long periods of accumulation into short bursts of massive price increases. Could that happen with adoption? Could that happen with the settlement of a lawsuit? I don't know. Could it happen with Flare Networks 9th of January? Also, I don't know that either. But that's where my speculation would be. If I was going to build a portfolio right now, I would probably... I'm scared that the SEC may come after ETH if there's a settlement. If there's a settlement with Ripple and the SEC, I don't know what the settlement would look like, but I would be scared for the rest of the crypto market. I'd probably build a basket of Bitcoin, some ISO tokens. Like I'm heavy XRP. I'm like 95% with 5% ApeCoin. Seriously, at the minute, we've seen NFTs go on a run. Is that speculation? It's kind of off the back of off the back of what Donald Trump did, releasing his NFT collection. Are we going to see other politicians or figures follow suit in that sort of sense? Is it starting to show some of the power of NFTs? Yes, whether you like Trump or not, I don't really care. He's a big influential person and he's released an NFT collection and it brought a lot of eyes to the space, new people. We're seeing Starbucks introducing their NFT collection and like reward scheme. I think that's going to bring a lot of new people into the space. I think the space is really close, if not ready for mass adoption. It takes probably one click to download MetaMask now and then download a Starbucks NFT. If they do it on Polygon, they can probably freely airdrop that to your wallet for it's going to cost them like 1 cent probably, and then you've got a Starbucks NFT. This NFT can be tracked. This NFT can track like what store you buy, what drink specifically you buy, what time, what day. They can then personalize discounts, airdrops, incentivize. Oh, you buy a caramelized latte on a Tuesday, cool, you can get a free muffin. If you didn't buy one for a week, you get a free muffin if you go in next Tuesday and buy a caramelized latte or whatever. They're the sort of things that they can do with NFTs. People don't understand the power of what's to come there. I also think Web3 gaming is going to be massive, so I'm trying to, even though it's up and down in terms of like my concentration level for it, I'm trying to build a Web3 community for gamers. I think gaming and Web3 is going to be one of, if not the biggest catalyst ever. I think gaming in general is going to be bigger than recreational sport in my lifetime. It's already on the way there. Even from a personal experience, crypto feels very similar to gaming in the early days. I was competing in Call of Duty for playing in I played 2 LANs, and one was literally in an industrial warehouse, and then now they're playing in like stadiums with hundreds of thousands of people watching. And I was playing like one of the biggest tournaments in Europe when I was just in there was like probably 20 or 30 teams in like a warehouse playing on tables. Now they're playing in stadiums, and that's just in like 10, 15 years of Call of Duty specifically. I think gaming, when that steps into the Web3 space properly, is going to absolutely boom. As soon as I can play a game where I can just earn for playing, I'll be on that game. If it's decent AAA, I'll be on that all the time, making it surplus income for myself or extra income. And I don't think it's long. They have tokenized economies within games where you can't actually draw out the money or the value that you put in there. It's gone instantly as soon as you put it in. Yeah, you get to play with the skin or the camo that you buy, but you don't actually get to draw that out as real world value. As soon as someone unlocks that door, which it looks like Matic are trying to do with CEO of Polygon Studios, Fwiz, ex-Call of Duty commentator, had a big hand in game battles, which sold to MLG and Activision, then YouTube gaming. He looks to really be putting his foot in the door in terms of bringing Web3 and gaming into the limelight. So that's something that I've definitely got my eye on. And also Animoca brands with Yatsui, as their CEO, talks a lot about gaming and the investment that's happened over the last year and how much money's been pumped into gaming for Web3. And obviously the big NFT collections like Bored Ape Yacht Club, CryptoPunks, or Yuga Labs own both IP rights for both of those. You're obviously seeing Nike with Artifact and Adidas and the metaverse, and Meta themselves trying to all build on what we use today, like Zoom. We're pretty much cyborgs, in my opinion. We hold our phones every day, Apple Watch, computers everywhere, Wi-Fi everywhere. We're essentially one step away from the metaverse anyway, depending on how you phrase that term. But I think gaming's got a big part to play within the next step of human, I don't know if you want to call it evolution, but human attention at least. Whether that comes in 2023, I don't know. We just need one decent AAA game to change the world, in my opinion. And that's the same with the finance system. One bank that changes its policies to properly allow crypto payments will leave all the other banks in the dust, because they'll be able to settle for free, essentially, and instantly, and no other bank can do that right now. At the back of financial issues and crises like we are in now, like stocks and shares down like they are, comes innovation. People try and change things to try and make money. And this is where we could see the introduction of crypto, for example, to supplement and aid the financial system, especially with CBDCs. Will we start to see integration in 2023? Probably, in my opinion, with more countries coming out, legalizing crypto for payments, and also probably making their base currencies digital and maybe even crypto based if their assets are, if their main currency is volatile. Will we start to see a move away from the US dollar potentially, with BRICS nations, like we talked about, becoming more digital? I think there's call for it already, and with the petrodollar, potentially with Saudi Arabia and China buying oil the way that they are. Will we start to see more of a move away from the dollar? I don't know when that will happen specifically, but it could be a reason why we see the DXY come down further. Yeah, and that's probably in and around everything that I'm going to talk about in this video. Just wanted to spew out some ideas to you guys, so when people ask me why I'm bullish, I think the main reasons are there's a lot of cash on the sideline. Like I talked about, sentimentally, the people who are investing have been wrecked in this cycle, and their standard models have been working for them, and now everything's changed, and they're probably going to get caught, as they did get caught going towards the downside. They're going to get caught trying to go further down to make their money back, and then the markets will reverse into a short squeeze with the put-call ratio probably pushing up and seeing a FOMO run to all-time highs. Probably the best performer if we have a rally like that would be crypto, because of how volatile it is in correlation to equities. And I also think it's got a move ready for it with the lack of strength of the DXY. Maybe an explosion to catch up also could be wrong there. And then the other side of that age bracket, people who got caught in the 2008 crisis, lost a lot of money there, and don't want to get caught on the losing side of the trade again. and everyone wants to be the guy that called for the Great Depression and got it right, but everyone's calling for the same thing, and that often leads to the path of most pain, which would probably be to the upside right now. Well, it would be statistically. I think interest rates will start to come down in 2023. I think inflation's peaked. I think we may see negative inflation. It's a big call for June, July, or August, like I said. And why I said that, I think crypto will have a decent year. I think XRP is hopefully going to have a decent year with the catalyst, the lawsuit, and maybe some other things like adoption potentially. The basket of cryptos that I create, I didn't actually talk about that, did I? I'd have some Bitcoin. I'd have some Ethereum always in my basket. Both of those two, just because they're so liquid, and institutions are probably going to look towards those. I'd have XRP, of course, a huge portfolio, a huge weighting of XRP. I'd be interested in what's going on in the metaverse section and gaming section. I've got a weighting in ApeCoin. I'd probably get a few blue chip NFTs if I had some big capital laying around. And if not, some speculative metaverse token, because some of those could do 100x if the metaverse really starts to take off. Other than that, yes, I could be wrong. Everyone's pointing towards the downside, and I understand their arguments. People don't want to spend if they've got no money. What are they going to buy? Consumables are going to go down. Earnings for businesses are probably going to decrease on that basis unless the Fed and the governments in general step in. Are they going to do that? I don't know. There's a lot of ifs in my equations. Could the war increase, but also could the war stop completely? Both sides of the argument are very valid. Could further problems occur? Will people hate against the East, and will people hate against the West? Are we going to see deglobalization? Are China going to shut down because of C-19? All these things could add into a big pot of problems, but also on the opposite side of those, there is positivity, because all those things may or may not happen. So all that being said, guys, that's my opinion. Let me know what you think in the comments. Am I right? Am I wrong? What have I missed? I'd love to know your thoughts. Peace up, A-Town down, as Usher would say.